The COVID pandemic and the resultant lockdowns have irreversibly changed the business paradigm all over the world. Riding the wave are e-commerce firms promising delivery of services and goods with minimum social contact and maximum hygiene. And in that order, we have the most popular Zomato launching an IPO, which is the largest by an Indian consumer internet firm. This is a review video of the IPO Zomato. Gurugram-based food delivery firm Zomato started out as a restaurant review site and later expanded to become a leading food aggregator and deliverer. Zomato has recently announced its plans to launch an IPO, that is the initial public offering, and it has already filed its DRHP with the regulator with SEBI for an IPO of Rs 8,250 crores. Out of this, 7,500 crores will be raised by a fresh issue of equity shares. The balance 750 crore worth shares comes from a stake sale by e-commerce major Info Edge. This holds an 18.55% of shareholding in Zomato. This IPO would be the largest since March 2020, when SBI Cards raised close to 10,000 crore rupees around that period. Zomato IPO is pegged as one of the largest by an Indian consumer internet firm, one that caters to individual customers and not businesses. Found in 2008 as a restaurant discovery website where it wrote reviews about other restaurants, Zomato is now India's largest food delivery company. In 2015, when it ventured into the food delivery business, it was a crowded space with half a dozen players like Swiggy, Tiny Ola Cafe, Food Panda, Runner and Scootzy. However, currently, the food delivery space in India is now a competition between two head chefs, Zomato and Swiggy. By the way, a new large player, Amazon, is also trying to make its mark. Zomato also has a subsidiary company called Hyperpure, which is in the business of supplying raw materials to the restaurants. This was started in the year 2019, and by the end of 2020 in December, it supplied to over 6,000 restaurant partners across 6 cities in India. Like I had mentioned earlier, Zomato originally launched as a restaurant discovery platform and aggregated information such as menus, dishes and user reviews. It mainly earned through restaurants that paid them for enhanced visibility on the Zomato platform. As of 31st December 2020, it had 3.5 lakh active restaurant listing on its platform. The company's subsidiary Hyperpure not only allows Zomato to better forecast demand and therefore source raw materials such as grains, fruits and vegetables on a large scale, but it also acts as an upsell to its restaurant partners, that is a part of the bundle of services aligned with the food delivery. Lastly, the food delivery business, in which the company acts as a delivery agent between a user and a restaurant, earns through two ways. The first way is through the commissions from the restaurants, and the second one is through the delivery charges that are paid by the customers. Apart from India, the company operates in 23 countries around the world, namely UAE, Australia, New Zealand, Philippines, Indonesia, Malaysia, USA, Lebanon, Turkey, Czech, Slovakia and Poland. Zomato looks like a typical food delivery behemoth. Impressive revenue growth accompanied by net losses of similar magnitude. The company posted $368 million revenue for the year 2020. That's double the revenue compared to the year 2019 and 5 times the revenue compared to the year 2018. Most of this revenue came directly from its operations. So it is pretty much widely understood that it generates nearly 85 to 90% of its revenue from its food delivery business. But during this period between 2018 and the year 2020, Zomato's expenses grew at even faster rate than its revenue, contributing to its bleak profitability outlook. For the year ending March 31st, 2018, Zomato posted a revenue of $65 million but with expense of $80 million. But in 2020, its revenue grew to $368 million and also its expenses exploded to reach $672 million. Zomato generates 90% of its revenue from India. Zomato's founder Deepinder Goyal currently holds 5.51% stake in the company worth Rs 2,254 crores. As per Zomato's latest shareholding pattern, InfoEdge is the company's largest shareholder and controls 18.5% in the company, followed by Uber BV holding 9.13% and Alipay Singapore Holding Private Limited holding 8.4% and finally Antfin Singapore Holding Private Limited holding 8.3% of shares. Zomato has about 75 shareholders as on May 15, 2021 and only 18 of them hold more than 1% shares in the company, and these 18 investors account for 89.33% of their shareholdings in Zomato. The company will use about 3/4 of its funds raised for organic growth, which refers to expansion plans, technology upgrade, hiring, and inorganic growth, which mostly means acquisitions. The balance 25% will be used for general corporate expenses. Zomato has not announced a timeline for the IPO yet, but potential investors can meanwhile do a deep dive into the food aggregator's finances and performances to decide whether or not you should invest in the stock. The biggest query of analysts for now appears to be, after COVID, what? When the pandemic is finally contained and the movement curbs eased, restaurants will be sure to pull back its customers. People would in fact like the dining out experience after a long hiatus. This means food delivery firms might see a big dent in their businesses after COVID. Yet, it cannot be denied that food delivery is here to stay whether or not the market retains its present sheen. And in that market, Zomato has definitely a sizable presence with strong brand recognition. Zomato turned out to be a unicorn, which is a term that refers to a startup valued at $1 billion or more in 2015, and its valuation has since grown steadily to reach over $4 billion currently as per the analyst estimates. It is not easy to predict how far such a valuation can sustain since the market is currently in a state of flux. Also, there is a little concrete data on the food market in India since a humongous portion of it is accounted for by unorganized players. According to its DRHP filed with the market regulator SEBI ahead of its IPO, Zomato has been posting losses for the past 4 financial years. However, e-commerce companies are mostly making losses all over the world. Encouragingly, according to the DRHP, Zomato's average order value has risen from about 378 rupees in the first quarter of fiscal 2020 and 2021 to about 408 rupees in the third quarter of the year. Well, right now the company has just filed its DRHP. Till the time it comes out with an IPO, a lot of things might change. However, if one plans to invest in Zomato, then the most important thing to track would be Amazon's expansion in the food delivery business. At present, Zomato and its Bengaluru-based rival Swiggy runs a near duopoly in the food delivery sphere with an almost 90% share. Amazon India, which has just entered the sector, could prove a formidable competitor since it enjoys greater financial muscle as well as a well-entrenched delivery network. The rise of smaller regional delivery services, referred to as hyper-local in e-commerce parlance, could also pose a risk for Zomato in the future. In such a scenario, how far the unicorn can sustain its high valuation remains a puzzle. As analyst points out, in the food delivery business, cost to switch is practically nil, where customers can simply stop using one app and start using another. See you in the next video. Bye-bye.